Yo, what's going on, guys? Welcome back, and today we had a brand new video, this time reacting to a video from Andre Jick. I think that's how you say his name. I hope I didn't butcher that. But he's interviewing a big investment person, guy, hedge fund manager, former hedge fund manager. He'll say his name here, but I thought it'd be cool to kind of react to this, react to the points that this guy makes, and see if it changes our thoughts on the things we're investing in right now and our path looking forward, and just see what it's all about. So without further ado, let's get right into watching this interview.
Can you please help explain what the doom loop is? What is this major issue of corporate debt bubble and how the insolvency might follow? What does this mean? I know some of those words.
It's a little bit complicated, right? But what it means is, as opposed to the audience who's watching this, there's actually a huge group of people called the baby boomers. And the baby boomers are aged around 66 years old on average. And they've got this huge amount of money in their pension pot, and they're about to retire. So if you think about people retiring, what do? They spend their pension. That's the point of having a pension, to get income once you've stopped working. Now, all of that money is invested basically in two things: the stock market and the credit market. So the credit market is where companies borrow money by issuing bonds, and your pension buys them.
All right, so it's kind of talking about pension plans, which is a big deal because obviously we all know baby boomers are a huge group of people, and right now, like they said, average age 66, getting ready to retire. So they might be selling off their stocks and investments and stuff, and we might see a downtick in the price of stocks and everything because they're just selling off their things. They're reaching into their pension, their retirement plans, and starting to try and kind of spend that money because they're retired and they need it, and they're going to spend it on their stuff like that. So hopefully it doesn't destroy the market. Let's hope for that. But
return on it, a yield. So that's all well and good until the business cycle goes down. Once the economy starts slowing down, it sets off something called the doom loop. And the issue is that the only buyer of stock markets really over the last 5 years has been the corporations buying back their own shares, because all the baby boomers who have all the money have been trying to sell shares over time as they get older. And the millennials haven't bought as many shares. They've bought some index funds, which has screwed up the market a little bit as well. That's a different thing.
So buying index funds, I didn't know that was messing up the market. I didn't think that would really have any big effect on it that much, but I guess it makes sense because it's not buying straight up shares and owning like partial shares of a bunch of companies and an ETF and things like that. But that's kind of the doom loop, I guess, is called. It's kind of interesting to think about. Like stock companies have been the ones buying back their stocks to push prices up using debt. And then right now, when there's a recession or a downturn in the amount of income the company's bringing, they can't afford to pay back that debt. And in doing that, the pensions and retirement plans of these people actually are in danger of being lost, which is, I mean, you don't want to see that.
So what happens is in a recession, all of these companies don't have enough cash to pay debts. So they stop buying back their shares because they issue debt to buy shares back. So then suddenly the buyer of equities has left the building. On the other side of the equation is those bonds. Those buyers were the pension plans, like Illinois and Ohio and Connecticut, whatever. Now, all of those guys don't have enough money for the promises that they made to these baby boomer retirees. So they're losing tax receipts to prop up
not being able to pay back
pensions. And what
pensions.
happens is in a recession, obviously nobody pays taxes. So then there's no buyer of bonds either. So you get a situation where companies have borrowed an extraordinary amount of money, the most in history, and everybody's pension is invested in this stuff. And now suddenly there's no buyer of equities and no buyer of the corporate credit, which is why the Fed had to come in and buy some of this credit to stop the entire pension system blowing up.
So all that was kind of already talking about what I just touched on is like the pension plans are based off of that debt because of that supposed to be pretty consistent income and fixed rate kind of. And with it, the doom loop or the corporate credit bubble popping, they're not going to be able to pay back those pension plans and that debt and everything that everyone has for retirement plans is in jeopardy. So obviously you don't want to see that happen, and this is how it's affecting like the broader market, like these people that have pensions and retirement plans. With this happening, they don't have the time to, like someone who's 20 in their 20s who has, until they reach 60 years old to get investments and return on that money. They are already 66 on average, and they don't have the time to sit there and try and recoup this money. They need it now, otherwise they're not going to be able to retire.
You think that we'll see less of a return in the stock market in the near future?
Well, here's a group of people with all the assets. Here's a group of people with no assets. What the free market should do is allow those prices to adjust so these guys can buy equities at cheap valuations, so they have an expected future return that's high, or be able to buy property, whatever it may be. The problem is the millennial generation is stuck with all-time record valuations in equity markets, zero interest rates to make money from bonds, property at all-time highs. So what is the opportunity set? And the government, in the meantime, doesn't want to allow these baby boomer voters of 76 million, who all of the government are made of, they don't want them to go bust, so they will support these guys at all costs.
So that kind of talks about how it's like they're supporting the baby boomers because of how much they are. 76 million, that is a lot. That's a lot of people. And to try and support them because they're all retiring, 76 million, that's a ton to try and retire and keep their pensions and stuff safe. But I think I agree with what he said, taking like assets from up here where everyone's got it, the ones who don't have it, and they should correct until you can buy in and then go back up. Ideally, I think that's what the market would do, but with all the government intervention and trying to bail out everything and doing all this types of stuff, we probably won't see that. I mean, we did see a huge dip. I think there was a big chance to buy in the market. It was down like 20 or 30%, something big like that. And I think that was the time for people to buy in. But you just got to balance it too, because that's the time when everyone's the most scared. So you got to balance if you're willing to risk going in the market at that time to potentially lose more, but in the long term, probably, there's no 100% anything, but probably start gaining money on what you bought. And I mean, I think we've already seen that bottom.
Why are they doing this? Why don't they allow the free market to work the way it's meant to work?
Along the road from, let's say, 1980 to now, we created a huge problem, which was allowing debt to grow. As interest rates fell because of this aging population and their investment in the bond market and how that drives interest rates lower over time, debt rose massively because people thought, oh, debt's cheap, I'll just take more of it. So the problem is if you allow that correction, you're going to blow up all of the debt, which is an insolvency crisis when companies can't afford to service their debts and they go bust, unemployment rises, and all of that kind of stuff, and the pension plans blow up as well. So there's the real fear of what it does not only to the baby boomers, but to the entire financial markets and the global economy because of consumption. And guess who loses their job? It's the millennials who lose their job because the others have been retired. It's a screwed up situation. And this is why so many younger people are angry or opting out of the system. I mean, it's extraordinary that the rise of TikTok tells you one thing: is people just want escapism because the reality is not good.
I could see that everyone wants escapism. Everyone wants to get away from like real life. And talking about that debt, like I didn't even realize that like companies that just take out a bunch of debt because it's cheap to buy back stocks. I knew they bought back stocks. I didn't know they did it through debt almost exclusively, which is, but like you said, you can't let the debt market, correct, because that'll just screw up a bunch of things, basically screw up the economy by taking away from these like retirement plans. It would take away, these companies would go broke, go out of business, and then unemployment rises, and then it's the next generation. It's not the generation that's already retired, like the baby boomers. It's the millennials, Gen Z, all these people who suffer because they lose their jobs and they have working for a company that is going to go out of business that you don't think would be able to, but then they lose their jobs. So then you're in a big predicament with how you deal with correcting this like debt market.
What alternative do we have then besides the stock market? That's all we've ever been told is real estate, bonds, stock market mainly. Where else do we go?
Crypto.
Crypto. That was kind of going towards that direction.
Well, listen, I may be wrong, but let's say you're a 26-year-old, right? And you think, you've got $5,000 of savings, and you think, well, what's the point of buying stock market all-time highs? I don't know what I'm doing. I'm going to lose money. But Bitcoin, for example, is a potential asset. And if anybody ever wants to know more about it, read Safedine Amos's book, The Bitcoin Standard, which gives you a really great understanding about why Bitcoin is a really great asset for savings. Now, the good thing about Bitcoin is its expected future return is very high. Could it go to zero? Probably not anymore. Could it fall 50, 60% from here? Of course. But its expected return is maybe 100 times from here. So you actually have an opportunity as a young person that even if it goes wrong and it doesn't work out, and you wipe out half of your $5,000, you've got plenty of time to make it back.
So I couldn't agree with that more. I love crypto, and after hearing that, I mean, I've been focusing more on the stock market, but I think I'm going to get back into kind of buying in Bitcoin. I have Bitcoin and Litecoin, as well as a couple other cryptos. But I mean, I spent like a year probably of learning about crypto, watching Bitcoin documentaries, watching YouTube videos about people talking about crypto and Bitcoin and how it works and why people want to use it and what the future looks like. And that's why I became so bullish on Bitcoin. And I still think that it is nowhere near the prices that it's going to be by in the future. And we can see Bitcoin taking off. We've seen right now, I think McDonald's, Starbucks, and 19 other companies are testing the Chinese digital currency in China. And I mean, if that goes well, and they can implement a system to receive and accept digital currency, then why don't they come to the U.S. and like the UK and Europe and all that types of stuff, and implement like a system of accepting Bitcoin? And if that happens and Bitcoin becomes a universal accepted currency, I mean, the sky is the limit. We're talking about millions, multi-millions of dollars per Bitcoin. So right now it's like $7,000. It's like $7,500, $7,600, within that range at the time I'm recording this right now. And I mean, the sky's the limit. So why not take that risk, that jump, and go into crypto? I mean, I completely agree with that, and I've always talked to people getting crypto. The big thing, though, I always want to push: don't over leverage. Don't put 60% of your life savings in Bitcoin, because it's extremely volatile, and you could lose 30% in a week, and then gain 60% the next week, and then lose all of that in the next month. And it's very volatile, but it has been an ascending asset. It's been something that ever since it's been created, it's been going up. The lows, like it goes high, but when it comes back down, it doesn't go back down to a level where it would be losing money. It has a line going up where over time it has constantly been earning money and being worth more. So I completely agree. I think everyone's got to get in Bitcoin. If you don't have Bitcoin or Litecoin, those are two I focus on. I would get into that. I would start getting into it. Dollar cost averaging, putting money in every week, something like that. But I would definitely start thinking about doing that.
Right now, it's a very complicated situation. But you may be given an opportunity to buy things very cheaply. An old adage that somebody told me when I was 22 years old that I've carried for the rest of my life, which was, he who has cash in a recession is king. The price of stocks fall, the price of real estate falls, the price of goods fall. You can buy anything in a recession for less. So the idea is, where do you start investing? Do you start investing at all-time highs and record valuations? Or do you just sit on cash and say, cash gives me the chance to buy shares if they fall 50% or more? So then your future expected returns go up. And a bit of crypto, that makes sense too. Now, real estate is an asset because you live in it. And I always advise people, if you can, buy a house and try and pay it off as fast as you can. Because then if anything goes wrong in your life, you've got a place to live, and you can basically get a bar job and cover your costs. But that means paying off a house. But if you can do that first, then you've got the strongest strength possible from which to operate. But that takes time to do, and a bit of luck, and a good career.
So those are the three asset class, stocks, real estate. I didn't think you touched on index funds too much, but I mean, it is true. Like, anyone who has cash in a recession is king because you can buy everything at great deals. I fell into, when I was started investing in stocks, they weren't super high valuations. It was 4 years ago or something like that. And I started investing, and then I kind of stopped for a little bit, but I kept the money in there, so it kept growing. But then right now is when I really went hard, and I started putting a bunch of money into stocks because the market collapsed, and it was just great prices all around. So I've started pumping money into stocks, but I'm thinking about going back and forth with crypto and stocks now, and then as well as buying more real estate. I have this property, obviously, right now that I'm recording all this stuff, but I want to go out and buy another property because real estate is a ascending asset as well. It goes up with inflation, and it goes up in value over time. So it's good to kind of diversify your portfolio. In my opinion, that's how I think of it, is like making sure you don't have only stocks, because if the stocks fall, everything you have falls. So you want to have some stocks, some crypto, some real estate, kind of hedge yourself so that you're not dependent on one thing, and you can rely on growth from other sectors, so you're not focusing on one, and then if it crashes, you are in big trouble.
Don't blindly listen to Wall Street. Wall Street, their job is to get your money out of your pocket into their pocket. So even with index funds, they're telling you a narrative is stock markets always go up. So this is a no-brainer. That's a false narrative. If you look at the Japanese stock market, the third largest economy in the world, that stock market peaked in 1990. And it went down 70% and has basically been trading sideways in a big range over 30 years. Wow. Now, Europe peaked in 2000, and it's been doing the same. So Taiwan, South Korea, many of these markets peaked or have been around the same levels for decades. If you look at the UK equity market from 1750 to 1950, it traded sideways because stocks should go up and down basically by the business cycle and the earnings. But it's this massive drive into pensions that created this valuations bubble that we've had today.
All right, so I actually didn't know that Japan's market peaked already, and UK, Europe's market peaked and has been trading sideways since then. That's kind of worrisome a little bit. I don't know if the US market could do that or would do that, simply because of, like they said, with that debt and stock buybacks that companies do, as well as we are the controlling. We're like the world currency right now, the US dollar. It's the world reserve currency. So other countries rely on the dollar and stuff. And for other people in other countries to get involved in the US dollar and stuff, the easiest way is to buy US companies in the stock market. So I don't know if we've already peaked. I hope not. I really hope not, because everyone wants to make money in the stock market, but that's kind of crazy. Thinking two other markets, the second largest market and third largest, have already peaked. Japan peaked in 1980, and then UK or Europe in the 2000s, and that's kind of crazy to think about it. They've already peaked.
Personal bet is that over time, over the next 3 years, because of the situation we're facing, which is the biggest economic crisis the world has ever seen, the chances are that reality catches up with the stock market as the baby boomers are forced to sell to retire. So I think the market goes down significantly over time and then probably trades sideways for 10, 20 years and doesn't go up, in which case the kind of strategy that you're talking about of dividend shares, you're looking at it in a different way. You're looking at accessing the cash flow from the corporations, and it's less driven by capital gains and more driven by income. that makes much more sense in that environment, and that will work well over time.
All right, well, I certainly hope the market doesn't trade sideways for 20 years. That would not be great, but I do have some dividend stocks and stuff like that. Not enough to be content in the market not going up, but I do think big companies like Apple, I don't see not being able to continue to grow outside of this pandemic. Microsoft doing the same thing. Disney to recover after this stuff and continue to push the boundaries. I just think blue chip stocks, the big ones, I think there'll be a couple that you can make money off of. Clearly, when someone like this talks, you listen. You have to give value to what they're saying. And a lot of things in this interview I didn't even realize were things that had happened, or the market's peaked, or the different ways to view it. And him bringing up crypto really brings me back into that world and wanting to get back into. I haven't been buying Bitcoin and like Litecoin over time as much as I was before, but I think it's time to start getting back into that, start building up more Bitcoin. That's the coin I'm really interested in. I have a decent amount of Litecoin, and I just want to get in Bitcoin really because I just love the idea of Bitcoin. I always have, ever since I learned about it, and I think crypto is a huge way for people to make money and be a part of the future of money, which I really do think can be crypto. So let me know what you guys think. How did you enjoy this type of reaction video, listening to an interview? I just thought it was really kind of cool to see an interview with somebody who is a big investor, known for this, and knows what he's talking about. Because whenever someone like that talks, you want to listen and you want to take what they have, form your own opinion, obviously, but take what they have and give it value because it has value. So, guys, let me know what you thought. Let me know what your plans are for investing in the future. Are you interested in crypto? Do you have crypto? I think everybody should. But smash that like button. Smash that subscribe button. We are on the path to 1,000 subs. And that's going to do it, guys. I will see you in my next video.